Hey, Ron, good to see you.
Yeah,
You have a
Chad.
deal. You have a deal you want to talk about. I'm excited to hear about it.
Yeah, so continuing in our trend, this is a personal investment of 4 acres of industrial outdoor storage. It's located in DFW, prime infill market that we love, and it's roughly just 3 separate single tenants is the current setup. But because it's all contiguous, we definitely could lease it out to fewer tenants or I guess more tenants. Um, 2 acres of improved, stabilized, and fully fenced, opaque, metal RPAN fencing. There's a 1 acre fence that's a 7,000 square foot tilt wall, CMU type warehouse with office component. And that also has outdoor storage, has some covered outdoor storage. And they have a total of an acre. And then finally, there's another acre of fully paved. The other acre is fully paved too, fully paved with that metal covering on 3 sides of some outdoor storage in a 2,500 square foot office. So there's really no warehouse component to that one. But with the 3 sides, they were storing some types of equipment that can't get wet, can't get really rained on because 3 sides were enclosed. And so it's just really valuable space that we think the market rents are much higher. So yeah, that's the deal we bought. It's fully leased, but with some lease turns coming up, we were able to negotiate one tenant to sign earlier, an increase earlier before we closed. So that was great, NOI. And we also got him on a much better triple net lease. He had a triple net lease, but we upped the quality a lot. So we got that. We did seller financing, 5%. So that certainly helps as well. But this is just a great deal. It's a 9 cap going in with 5% seller fi, and 2 of the leases are going to roll in, call it the next 12 months. And so we'll backfill those tenants. I think they don't. One of them doesn't want to renew. One of them is transitioning out, so we know we'll have a vacancy, but we're not too worried about it. We feel pretty comfortable on the debt coverage without it. We think the play is to sign those new tenants, juice up the NOI, either refi or sell if we need to. But we're flexible, get the value. And I think iOS is just going to keep going up.
Agreed. It's a hot market right now. On the seller financing side, did you do a no money down deal? Are you
No, no. He had a little bit of debt left, so we had to up the LTV. We had to pay it off, make sure his debt was fully paid off, and put a little cash in his pocket. But
Yeah, you and I both have talked in the past about how virtually impossible it is to do no money down deals right off the gate. And they never look good anyways. Even if you could somehow structure a no money down deal, the chances of it cash flowing is so remote, and the risk exposure increases considerably. So I'm with you. I would never want to do a no money down deal. On the seller financing, what was that part of the negotiation that you would be paying him call it a below market interest rate in exchange for some other consideration, or what was the negotiation?
Well, don't tell him it's below market interest rate. I think we were telling him to kind of look at T-bill, or the 10-year T-bill is like 4. So we were trying to say, oh, you're getting better than that. You're getting steady income that's higher than some of these 5-year T-bill rates. Even I guess maybe a 1 year. It's only the 30-day that's kind of high. But the point is, no, we didn't necessarily spin it as below market. He just he agreed to 5. So.
Well, I mean, that's great for you guys. And you're right. He does make 5% return on that. I suppose compared to a market interest rate, we're probably, I don't know what bankers' appetite is right now to finance land, but I'm guessing it's probably 6.5%, 7% if you were to go through a traditional.
At least 7. Yeah, at least 7.5.
Yeah. Oh, so I mean, that's great for you guys to get a little bit of a spread there. And then, like you said, if you're getting a 9 cap going into it, you've got a healthy spread there already.
Right. And we depending on the tenant, because that's part of our plan too, right? Is a lot of these kind of Class C, I would call it. They don't want to put a lot of TI in for the tenants, and they don't want to charge a lot of rent. And so what happens is the tenants will come in, they take the space as is, they'll do improvements as needed, but it's kind of hodgepodge and it's not very professional quality. Like they won't fix things that need to be fixed because they're just going to run the building. Whereas we're going to try to impose a higher quality for the overall building. So not just you spend the money on things you need to fix and we'll lower your base rent. We'd rather fix the building and make it presentable and like a nice setup and then charge a higher rate and hoping that we attract the right tenants that value, just a reliable building with no deferred maintenance. So that's a little bit of a difference that we're approaching our tenant, ideal tenant.
What type of tenants are there right now?
So one is like a granite cutting, like countertops. So they do all that manufacturing there. They store the slabs outside under that covered metal covering. And then they have cranes. They have, I think, 3 or 4 of the big saws, the table saws to cut, full size slabs. I think they bought a new machine recently that does jumbo slabs. And so they're a manufacturer, and that's their headquarters. So they've got like their sales, their installers, office in the front. They also do a little bit of showroom in there for like samples. And then there's like a towing recovery company that does like repossession vehicles. So it's just kind of like temporary transit parking.
One question I get asked probably more than any other from new investors or people that are considering industrial. Experienced investors are already very comfortable with it, but anyone considering it, one of the more daunting things that they have to contemplate is how do they find tenants? And I think the reason that it is such a overwhelming proposition at the beginning is that if you're not in the industrial space, if you haven't driven through industrial parks or spent time talking to all these different companies, you just don't understand how broad it is. Like all the just different types of companies that are out there. Have you found, because you also own other industrial properties, not iOS, you own other industrial properties. Have you found that there's less companies that would be suitable for just iOS versus industrial? Or is it an extension that there's much less iOS out there? Most of the land is going to be developed. So there's much less iOS, so that even if there is less companies that are suitable for it, that supply-demand equation still works in your favor?
Yeah, I think with iOS, most tenants think that they're getting a cheaper overall blended cost with outdoor component. And I think most tenants would be willing to store their stuff outside, especially if it's covered maybe, versus required to go in. And I'll give you a perfect example. There was a building that we're looking at. It was like a weird two-pack of adjacent warehouse. They had a road sign company in there, somebody that owned the signs and mostly just rents them out for contract jobs like, the road work or construction, but they do the miles and miles of cones and the barricades. They had that stored inside a metal building, clear span. It was like 50,000 square feet, but they had a ton of storage for plastic road cones, barricades, metal trailers that they like transfer. And it was completely, to me, unnecessary to be inside. They didn't need to store that inside. And if you're storing it fully secured and inside, you're paying a premium rate. So I think there's, they'll lease that space if the numbers work for them and they want it, but they don't need it. And they would probably prefer to save money by having the outdoor storage. So yeah, I think there's tons of demand, but there's so much flexibility between what has to absolutely be stored inside versus what could be outside if the rate was a lot cheaper.
What is it about iOS that is attractive to you?
Well, we love iOS for the multiple exits. And even on this particular deal, we were shopping it for lease because we were trying to lease up some of the space under DD. And we had people offering to buy. So they wanted to buy as an owner user. They wanted to buy to develop the 2 acres. And so we just have so many options for exit that is not just cap rate and interest rate and NOI driven. That's what I like about it. Owner users could buy us and pay a great basis for, what we paid. You can sell to a developer. We've got 2 acres of prime industrial that is flat that you could go vertical, not flood zone, all that stuff. So you could sell or you could internally develop if you wanted to. And then finally, you can just sell to the kind of the inflow of REIT money or large partnerships coming in with large capital wanting to buy IOS. I think a lot for that reason, but we take the property that we buy, which is a little bit rough around the edges. There's some hair on it, and then we clean up the leases. We got a brand new beautiful Alta survey. And that's what gives those types of people comfort, phase 1. Like our seller didn't even have a phase 1. I was like, okay, cool. But when we're able to package this up and possibly in a portfolio offering, then we can sell 30 million of iOS to those types of buyers, the Alteras, the Zenith, the IOV, whatever. But then they'll look at it for their minimum deal size. And then, that's why it's attractive to me. Multiple exits, and then there's just a lot of new money coming in.
Are you shifting to focus more on iOS going forward, or still industrial broadly and then look at opportunities that come up?
Yeah, I would have said like the last 2 years, really just my focus was iOS only, but I found I'm offering on some stuff that's more traditional, just single tenant. Maybe it has a yard component, but because of a single tenant with a long-term lease, I'm not really able to do much value add. So in that way, it's very similar to just a regular building. Like, what's the difference if we buy a 30,000 square foot building with 2 acres, but it's all leased under a 7-year lease, right? There's no value add. There's nothing I can do. I can't carve it off. I can't sell it. And there's no lease turnover coming up. Versus if that was just one building and it was 60,000 square feet on 5 acres, it has a 7-year lease. I'm not going to be able to chop it up, right? It's really just in terms of value for if the tenant vacates, what's the ease of lease up? Because people do like fully paved yards, secured fencing, 2 entrances. So I don't know. The line gets blurred a little bit where, yes, it's nice if there's outdoor storage component, but we're not necessarily doing a value add in underwriting.
You and I might be 2 people in the whole world that talk about industrial real estate as an absolute passion, and we're probably on the cusp of being nerds. But I love talking about industrial just as much as you do, and we've talked about this going back like several years now too.
Yeah. How long have we known each other now? Because what I love is I want to look back when we first started talking. I want to say like you were at like 1,000 subs or like 2,000 subscribers on YouTube, and I was like so happy for you when you hit like 2,000. I was like, yeah, and I was over here like 300, and now I don't know if you've seen me like I'm at almost like 4,300.
I saw you past 4,000. Congrats
past
on that.
4,000. Yeah.
Well, and rightfully so. Like I think that there's a big appetite for people to want to learn more about industrial, and there's not a whole lot out there. So I know your passion for it, and the other cool thing too is that we're both practitioners in the industry. You as an attorney, myself as a broker, but we're also investors in it, and we love talking about it. So I just like you, I live, breathe, and sleep this. And it's funny actually talking about going back to when we met. I think that probably would have been probably 2021, be my guess, is when we started connecting, and then we've had a chance to meet in person. Our families got together last time.
Yeah,
that's super cool. On that topic, though, industrial has also gone through a ton of change as well, and like we could even go back, like call it pre-2020. Industrial market was heating up for e-commerce. That was driving already a lot of the market and attention to the market. Then we hit 2020, March of 2020, the world shuts down, and there was a month where nobody knew what was going to happen. But after that, then industrial went crazy. distribution centers being announced everywhere. Everyone going on massive sprees on both the development and leasing space. Companies were leasing space that they didn't even need, just out of fear that they wouldn't have it in a year from now. Like, it was pure pandemonium from 22 to call it even 2023. Now we're coming into this spot where some of the news headlines anyways are saying that companies are giving back space and sublease rates are increasing. Like, in a short period of time, relatively speaking, 5 years, we went on this massive roller coaster. I wouldn't want to say that it's down, but it's different. We move tracks on the roller coaster. All that in mind, that's teeing up a really long segue to this question. What's your outlook now as someone that follows industrial real estate enthusiastically, and then you also have your own skin in the game on this? What's your outlook on what industrial real estate looks like going forward?
Yeah, I think that demand is still going to be there over the long term. We talk about office, for example. People are just in pain. Nobody wants to buy, nobody wants to lend on it because there's a structural difference of the amount of demand for a given population, the number of offices that they need. I think in industrial, we're setting ourselves up for a structural growth in how much industrial space there needs to be. And then it comes down to operations. I'm still very optimistic, but only in an operational sense, that if you run good assets, even if there's an oversupply in the market, tenants will come to you if you're the best operator, if you have the best properties, best location. If you're in a boom market and demand continues to grow, well, great, you're going to charge premium rents. But the more, and I've been talking to some older investors or just kind of getting to know their history, they just hold stuff and they just manage it, and they don't get out over their skis in terms of leverage, and they don't try to do too much at once, but you just slowly accretively grow, and then you can weather any type of economic output or outcome just with good operations. Because you say, look, I don't care about 10% vacancy in the market. I just care about my vacancy, and let other people suffer vacancy. They're going to have outside vacancies for their properties. But in talking to them, it really starts to resonate with me of just buy in good locations, buy things you really love, and then just manage it. And don't get too stressed out about the broader economy, things you can't control.
Well said. I was listening to something last night, a podcast. I can't remember who. It was Gary Vee who said it. I'm not a huge Gary Vee fan, but it came up, and the person that was interviewing him was Stephen A. Smith, and I just thought that was a weird interview between the two of them. So I listened to it. It was 20 minutes long. It was actually pretty interesting. And Gary Vee made a great point at the end. He said that founders typically don't run a company into bankruptcy of like a large company, but large companies often run themselves into bankruptcy because it's just a different vision. They start getting into that short-term quarterly cycle type of thinking where they're always trying to manage investor expectations. And then instead of having that founder mentality of thinking 10 years out, they're thinking quarter to quarter. And I think that that's a great comparison for real estate investors as well, is that if you're only thinking quarter to quarter, you're just looking at things differently than someone, and I share the exact same philosophy as you, as well as buy good assets and have a long-term horizon. Like, some of these things, I'd be comfortable if my kids inherit them at some point down the road, because I really do want to buy assets with that long-term thinking. So I think that is the key, is don't have that mentality of trying to meet quarterly expectations or buying a property just because you think you can flip it down the road and over leverage yourself in the process, go over your skis. Another great analogy. But if you have that long-term mentality, I like to think of it as, yes, the market could at any given point, it could drop. Like, industrial could have its own black swan event that nobody's prepared for, and we could have a down cycle. That is a possibility. But if I'm looking at a 10, 20, 30 year hold period and the market sucks for a year or two, that's a blip. That's a blip in my ownership path on that. And 30 years from there, I might remember it as a distant memory, but it's not going to be something that if it forced me to sell because I bought too much or over leveraged or I bought the wrong property, and then you had to liquidate and sell at a loss, that's a different conversation as opposed to just holding for the long term.
Yeah, in a downturn, you just can't give back the keys. You can't lose your equity, you can't lose title. And that's really a function of your leverage and your bench capabilities in terms of deep pockets, right? How long can you weather a vacancy? Do you have cash for the TI and leasing commissions that you need to pay? But one thing that I had a mentor early on in my legal career as a developer, and he really liked apartments, right? He made a bunch of money in multifamily, but back then he was saying, look, apartments will always be full. You just have to adjust the price. And he said, you need to have a lot of cushion in terms of how much you can drop your price, but you'll always have cash flow. Like people will always want a place to live. There will always be a certain segment of the population looking for a deal or looking for the cheapest apartment, and they're willing to move. I really resonate with that, and I think it makes sense to me, but it's also kind of the same in industrial now. I think these are people that are going to continue to be in business. We just have to maybe adjust our base rents. And that's okay if our leverage is not 85% or 80% and we don't have variable debt or whatever. So if you have that mindset of this thing is always going to be full, some years it may throw off, 60,000 a year. The next year it throws off 100 and then it goes to 150, but it may slide back to, only 100,000 of NOI, but it's okay in the long term. And so to me, you can make money in any asset class. We've just happened to choose industrial. I like low basis of land, but you can make money on anything. You just have to hold it and manage it well for a long term.
And being extremely passionate and nerdy about it doesn't hurt either.
I mean, the effects are compounding. And so I'll tell you, today I got a tenant inquiry exactly for a different property. But because we have a concentration and we have very similar profiles, I said, hey, maybe this one doesn't work for them. Did you offer them this other site? And it was a perfect, fit. But it's like those benefits where I start to see tenant needs, tenant requirements, and then they can fit something else that I have that's nearby, that's a similar profile and maybe cheaper price, that doesn't fit for them. But you just compound those benefits, the more options and concentration you have, market knowledge. So,
absolutely. What's on store for your YouTube channel in 2024? Are you working on anything exciting or any plans, or steady as she goes?
No, I'm always tweaking and kind of experimenting with the content, but the stuff that I think is really popular right now, Flex new construction. People want to know what we're doing. I have several clients that are breaking ground. They're buying land, going through that. So I'm going to be expanding a lot on Flex development, new construction, as well as truck parking. I get tons of inquiries and people wanting to collaborate or pick my brain or have a coffee and like all this stuff. So I'm going to be focusing on really truck parking and kind of my journey in those investments, and then Flex development, which I don't personally do new construction, but talking about that, and probably going to drop the Afro Man Reacts. I just don't have time, but focusing on those two because that's where a lot of interest is on Flex development and truck parking, iOS.
Yeah, I have an old video where I talked about Flex, and out of nowhere, it's become one of my more popular
That's the same
videos.
for me. So,
yeah, you're definitely on there. I might go a little bit the other way, as opposed to talking about things that people are really interested in. I still do that with my podcast interviews, and I do a lot of shorts on that. But one thing I really want to explore more this year, I want to do more property walkthroughs. So if like walking through a 1 million square foot distribution center and pointing out some of the things, or walking through a manufacturing shop and pointing out how they set up their equipment and the machinery. I want to do more video walkthroughs. And then I also want to explore more industrial history. So like that's just one that's that I've already done a little bit on, and just like talking about old 100-year-old buildings and the impact that like the architect's vision had on it, and how these buildings shaped other industrial. That's just more of like a passion project for me, where I don't know if people are other people are going to be interested in it, but I am. So those are going to be the two things that I probably add to the docket this year.
Okay. My hat's off to you. I think empty building tours, especially some of the modern ones, are incredibly challenging to make it a compelling story.
Mm-hmm.
So I have faith in you. So I'm curious to see how you do it. But I believe you're going to make a way to walk through an empty building at box and make it interesting about pointing out the, they have like mini heater systems for the flame retardant foam that's not sprinkler. Like they have two separate ones. So you'll have sprinkler and then they have a mini heater for a CO just for this foam so it doesn't freeze. Have you heard of that system? It's like, yeah. Some developer pointed out to me and I was like, I had no idea. And he's like, yeah, I didn't install sprinkler yet until the tenant requirements come in, but you have to do this type of thing. And it has a mini heater.
That's one of the things that I'm so fascinated with, and it not only gives us endless things to talk about, but I'm just genuinely curious about that. So, like I've said before, I don't know everything about industrial real estate. I talk so much about it. Some people might think that I do, but I've got gaps all over the place.
Yeah.
So one of the things I love about this is that you can share what you know already, but you also share what you learn along the way. And I think just having that open-minded curiosity of just wanting, I'd love to know everything about industrial. I don't, and I never will, because it's always changing. But that's what I think makes this industry so special.
For sure.
Cool. Can you shoot me some of those pictures
for the building
of that building, if you have any? Because I'll overlay that at the beginning as well.
Yeah. I don't think I took any selfies. Maybe I did. There's
Selfie
some
would be
cool
great.
things like the stone guy. He has his own water recirculation pump for, they cut the stone with water. So I think I have a picture of that big filter looking thing. It's like a big water tank.
Yeah, whatever you have would be great. A selfie would be good too. We'll throw that. That might be the cover. That might be the thumbnail.
More iOS. All right. Cool, Chad. I'm going to grab some lunch. But
Awesome. Thanks, Ron. Good catching up.
bye.
Talk soon.